What's going on, guys? Welcome into your energy news beat here on this gorgeous Friday, January 15th, 2021. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. How you doing today, my man?
It's a beautiful day in the neighborhood, and we got a hall pass.
Oh, thank goodness. It's been a wildly long week, but the weekend is just around the corner. All you got to do is hang with us for about 15 to 20 minutes. We've got a great show for you. You can check all of that and a bag of chips out on the rundown to my left. But first, guys, just subscribe to this YouTube channel, Energy News Beat. Hit that pesky notifications button. You'll never miss an episode. The best way to stay up to date on all of your daily energy finance news. Also, follow us at the world's greatest website, EnergyNewsBeat.com. Subscribe to one-click notifications, which basically gives you every single story in a notification to your desktop. The smartest way, it's what the pros do to stay up to date on all of the energy, on their energy. I'm telling you guys, this is the best energy news feed you're going to find on the market. Subscribe, do whatever makes the algorithms go nuts. We really appreciate all the support. On the U.S. equity side, to just start us off, it was a choppy day. The term "buy the rumor, sell the news" has never been more apparent right now. Today's headline on CNBC: stocks fall on Friday after President-elect Joe Biden announces details of a $1.9 trillion stimulus plan. If you'd have told me 2 years ago that a $1.9 trillion stimulus announcement with direct aid of $1,400 checks to people was going to cause Dow Jones to drop 0.3 percentage point, Nasdaq to shave a half a percentage point, and the S&P to shave 0.4 of a percentage point, I would have said you were criminally insane and had you locked up. But no, that's exactly what happened. At its lowest point, the Dow traded 89 points lower. To give you an idea, Dow Inc., Chevron, we love them, and Goldman Sachs all led that 30 average year lower. Energy, financials, and industrials were the three worst performing sectors. To give you guys an idea, the American Rescue Plan increases federal unemployment plans by $400 per week and extends them through September. Direct payments to many Americans of $1,400, which brings that total amount of the $2,000. The funny part on Twitter, people were scared. You said $2,000 checks, not $1,400 checks. Just take the free cash, people. There's also the plan calls for $350 billion in state and local government aid, $70 billion for COVID testing and vaccination programs, and raising the federal minimum wage to $15 an hour. We did it. The fight for 15. It's a joke, but the quote of the century, or the quote of the day, is there was real pain, this is a quote of the Biden administration. One of the few notes that I like, quote, this is from Tom Essay, founders of the Sevens Report. He said, plans for future historical stimulus, easy Fed policy, and vaccine news are all now well known, and those such catalysts simply don't have the positive influence on stocks that they've had over the past few months. So where's the next news coming from? That's really what I'm now interested in. What's the next headline the Fed's going to pump out in order to continue to prop up the economy? That's what I'm looking for on the U.S. equity side. Moving over to the crude oil side, there just hasn't been enough bullish news to continue to raise oil prices. Today, the bulls end up losing. Bears take control, down about 2.4 percentage points, 52.28. It's just not enough bullish news, as I told you. We can only go so far off OPEC cuts, vaccine news, until it's like the actual fundamentals of the U.S. Oil business don't look that good. Back into the curve was down about 1.5%. That's down to 50.68, so that contango widening again. In the lone bright spot, natural gas up 2.85 percentage points, $2.74. Again, we're back to weather trades. Looks like back end of this month supposed to be a little cooler, or at least that's what traders are gambling on. We saw a weather report from Bespoke drop, and that was really what drove that price up. Back into the curve, only up a little more, 1.77%, about $2.93. XOP, which is our E&P securities contract, 70.07. That's 2.3 percentage points on the downside. OIH, which is oilfield services, down to 179.75. That's 4% off the top line index. Some of our biggest equity movers. Let's take a look. Penn Virginia Corp, they're down 5.5. Battalion, they were down 6 today. Callon Petroleum down 6.5 percentage points, and Tensaco Gas down 7 percentage points. On the upside, some big numbers. Contango Gas up 8.5 percentage points. Midcon Energy Partners 8.3 percentage points. Barnwell Industries 10.9. Camber Energy 18, and Telrinian, a little midstream action, 24.3 percentage points. All right, Stu, you have had probably one of the biggest international news desk weeks in the history of the international news desk. You've got a crazy one today. What are we starting with?
Buckle up, put your tray table up, dude. We're off and running. Okay, yesterday we ran a story on Norway. Their price for carbon tax was 70. They went to what, 240?
Yeah.
Somewhere around in there. Okay.
Yeah.
We are now stopping off in England. Okay. We're in England, and the Bank of England tells banks to brace for sky high carbon price taxes. Businesses to start assessing risks they face from climate change immediately. Carbon prices may even exceed $100 to $40 a ton. This is crazy news. It's a follow-on from yesterday. Okay. In high school, Michael, did you ever stand there for a posed picture like on your baseball or in the baseball to mines? Did you guys go?
Yeah, we'd have to take, the team
Yeah,
photo every year.
yeah.
Hated it. Hated
Okay.
photo day.
Photo day. Well, here's photo day in China. Those two guys are standing there going, "Look, tanker."
This tanker.
Yeah, okay. The headline on this one though is China 2020 crude imports hit a record on stockpiling. They are stockpiling big with the lower prices. Now, I thought that was all pretty funny, except they're also putting in more refineries. So big news from China. Okay.
Yeah, China, they are sneakily importing and stockpiling, becoming one of the world's largest stockpilers of natural gas and crude oil.
Unbelievable amount here. Okay, here we go. We're off to Paris. Our buddies over at Total. I can't pretend to even speak French. I thought some of the nuggets in this press release they put out was each year total. They are
Well, what's the headline?
total withdrawals. Yeah, totals withdrawals from the American Petroleum Institute. Yesterday, Total announced that they're doing a major renewable solar across the U.S. Big deal. So now they're coming up and they're saying, let me read you a few quotes from Total. Each year, Total assesses the main industry associations they align with, and the alignment review is based on 6 key points. This is important to hear these. Our science-based position is that the link between human activity and climate change is an established fact. Our support for the objectives for the Paris Agreement. Oh, well, they are French. Our belief in the necessity to implement carbon pricing. Our confidence in the key role of natural gas in the energy transition. There's a little bit of this information there with them, so we'll just pass on that. But natural gas is the bridge. Okay, here we go.
Let's just call it like it is. The API, good organization. They're a lobbying company. They lobby for crude oil and gas. Total, who has basically gone completely the other direction, renewables. This is not a shocker to me that they leave the API.
It is kind of funny that they say in their press release how important natural gas is.
Well, there's the American Association, there's the American Gas Association. So I mean, there's a lobbying firm for that. This makes sense to me. I don't, yes, I think this is symbolic.
Yes, it's symbolic, but it's also hypocritical.
Call me when Exxon does this.
Oh, okay, got it. Okay, hey, we now have our bat boat on, and we're heading across the pond to Venezuela. Our boys in Venezuela are having fun. Yesterday, we had the spoofing fest with that other tanker that was sitting outside Venezuela pretending to be a tanker that had been beached since 2018 and then cut up. Well, Venezuela proposes deals allowing private companies to operate in oil fields. This has got lots of nuggets in it. Our president, Nicolas Maduro, facing collapse of crude oil output with the U.S. sanctions. So far, companies showing the interest in the deal are small. Really? And the government recently passed an anti-blockade law allowing oil deals to be signed confidentially and increasing spoofing ships. One of the lead buyers, China.
Makes sense. Makes sense.
All the stories are all intertwined, almost like a good comedian. Okay, here we go. Some good news. We're now back into North America and our Canadian brethren. Okay. Canadian oil and gas spending expected to rise 14% in 2021. We just had, I believe it was 50 to 54 rigs increase this week or last week. Which one was? Do you remember that, Michael? It was a lot in 1 week for Canada.
Yeah. That's what it was.
It was huge. Okay. So anyway, capital investments in Canada upstream and gas industry will rise 14%. That's 21.44 billion. Pretty darn cool. We're happy for our Canadian brethren. Good news.
Yeah. So no, I mean, hey, with rig counts were up 56 last week in Canada. Sneak peek, guys, they're up big this week. And without further ado, let's roll in to the U.S. energy shale, the U.S. energy patch right now. Not quite U.S. energy, but they're close enough. Rig counts come out today. U.S. sees an increase of 13 up to 373. But Stu, fire up them rigs, baby. Fire up them JSAs. Canada up 44 rigs to 161. That's over 90. That's like 100. I think it's like 98 or 100 rigs in the past 2 weeks. Choo. Great week for the week. Now this does beg the question: should it be this high? I don't know what the answer to that question is yet.
No, we don't. But we're happy some guys are back to work.
And remember, to keep production at the same level we're at now, we need 400 to 500 rigs a year. That's like the average. That's what the smart guys would tell you. Okay?
Right.
So, we're sitting there at 373. We're still going to be, production is still going to be declining. Now, maybe that's a good thing, though. Maybe that's a good thing.
Yep. When I was sitting there with Harold Hamm 2 years ago and he said rigs are going to be at 400, we all fell out of the chair and had a heart attack. He was dead on right.
He was right. Speaking of, a big boy Stu, this is getting the works everywhere. We saw a segment on this on CNBC. Twitter went nuts with this. The security top line headline: ExxonMobil under SEC investigation over Permian Basin asset valuation. Now, there's some, to steal a quote from you, there's some nuggets in this one, Stu. Okay, give you an idea. Several people involved with valuing a key asset in the Permian Basin's currently the highest producing U.S. oil field, have complained to the SEC during an internal assessment in 2019 that employees were being forced to use unrealistic assumptions about how the company could drill wells that they're, and therefore could arrive at a higher value. At least one, and to get this, at least one of the employees who complained was fired last year, according to the person familiar with the matter. The SEC began investigating claims after receiving the complaint, according with person familiar with the matter. We don't know the status of the SEC thing. Holy smokes, Stu. Now,
man,
there's a lot to unpack here. Because
are we going to call this Exxon Gate?
No. Because I think there's a larger conversation to be had about about asset valuation in the first place.
Yep.
Not my specialty. First off, not my specialty is asset valuation. But I work a lot with data. I work a lot with models, and I understand that garbage data into your model will give you an answer. But it's going to be a garbage answer. There's this, as my dad used to always teach me, because he's a big math guy, garbage in, garbage out. You feed bad data to a model, it's going to give you bad data. You give it to the data you want. It'll tell you the answer you want. So you have to be very careful with models. And that's all asset evaluation really is. From how fast you're going to drill, which was clearly the issue here, to well spacing, to decline rates, to your B factors, to all of these different things that come in that make up this valuation that can be tweaked, that you have to assume. There's this idea of risk management. How do you manage your risk? Well, you underassume what you think is going to happen. In this case, Stu, I think this is going to turn into a big nothing burger for a couple reasons. One, hard to prove. from the way I read it, you basically have to have quotes. You basically have to be able to prove that there was a manager that said, I know this is the answer, but you should say this because we want to inflate. You basically have to catch them in the act. Say, hey, we'd love it to be a little higher. You know what I mean? Hey, you just saying use this factor isn't constitute a conspiracy because you are allowed to be wrong. Being wrong is not a crime. Knowingly inflating your results, knowing that what you're giving is false, that's a law. But you can be stupid. That's legal still. May not be for very long, but it's legal to be stupid right now. Okay? So
don't drink coffee when you're saying.
But the second is, Stu, if Exxon if they get charged with asset valuation,
yep.
Oh my goodness, every other company in the Permian Basin should probably be hung in court-martial as well with them. Because you think Exxon's the worst one? Yeah, I bet you there's some private equity asset valuations that are pretty bad. Now, luckily they're private, so they're not regulated to the SEC, but I bet you there's some ones that stretch the numbers a little bit to get a little bit of a valuation on their RBL. So,
Yep.
As fascinating as I think this is, and do I think Exxon inflates their stuff? I think everybody does. Everybody does. Everybody does. Everybody wants to use the scenario and wants to think of the scenario that's going to best impact them. It's not a crime though if it's at least within a range of tolerance. Now, I don't know the actual, where they say they could drill a well in 6 hours. Well, that's probably a lie. But if it was a day or two shaved off, I don't know. Is it a crime to just think we're going to crank stuff out quickly? That's where this comes down to me, Stu. What are your thoughts before I wrap us up?
You nailed it right on the thing, and that is, if Exxon is actually guilty, everybody else out there needs to be beaten.
Yeah, I mean, unless you have the development manager for planning and reserves over at Exxon, I'm sure it's a nice person. Don't want to say anything wrong, but unless they're on record saying use this number because we want to inflate prices to management.
And your dad's right. Dad's right. Garbage in, garbage out. But if you feed a model a really bad lunch, that you get like slapped. So it depends on the model that you're using.
I've worked with enough models to tell you I can make a model show you whatever I want. I can put whatever I want into it and it'll output whatever I want. Whether it's high oil volumes or whether it's, marginal price elasticities that are really low, whether it's, prices are going to go up for crude oil. You can make a model selling. So when I read this, I was like, I wish there was a little more. And maybe there is, and maybe whoever leaked this, because the second part is, where's this coming from? Well, it's not coming from Exxon. I'll tell you that much. Nobody at Exxon released this. So is it someone at the SEC? Oh, it could be. It's probably one of the ex-employees, because you also read in here, one of those employees was fired. So, it probably comes from an ex-employee, which isn't going to give the best light. And I always say this. There's one side, and then there's the truth down the middle. The truth is probably they didn't do anything wrong. Because if you say what Exxon's doing is criminal, every oil company's criminal then. And we can have that conversation, but I like a paycheck. So I don't know what to tell you here. Stu, we need to move on because I could just go on for weeks about this. It's been an incredibly long week. I think I have enough frequent flyer miles to get to Mars and back as long as Elon can take us there.
We got a hall pass and we're checking out.
Holy smokes. If you've survived this far, guys, here's your hall pass. With that, Stu and I are going to let you get out of here. Finish up your day. You can tell your boss. Energy Newsbeat said you can leave. For Stuart Turley, I'm Michael Tanner. We will see you guys on Monday for another episode of the Newsbeat. Have a great weekend.